This is Livevol earnings report. So I'm starting this out because it kind of is apropos. We're in the earnings season, and there's earnings pretty much going to be every day. So I get this report every morning, and you guys can get this too on our website now pretty soon. But basically what it does is it lists all the earnings coming up, what the implied move is on the options, and then how much it moved the previous 4 earnings, 8 earnings, and 12 earnings. So let's actually go to the first one, which is Alcoa, and see what we see here today, right? So Alcoa, type it in. Let's go to the stats tab. So it looks like it's kind of mixed. They're buying calls and puts, 25,000 calls to 13 puts, slightly positive delta, and they're selling premium even though the volatility is up for the day. So if I look at the chart for the past year, you know, it's pretty much at a 52-week high roughly. It's implying a 4% move, and obviously in the past 12 earnings, it's only moved an average of 2.3%. So maybe this might be a good time to short if you are just doing the statistics. I think generally I'm kind of bullish on Alcoa, just because it's been relatively strong this whole year. Versus the rest of the market. Looking at the 13th, so what I'm doing is, like, you see this 13 strike, there's this volume right here. I click on the volume, all the trades come up right here. I click on again, there's time and sales that comes up, and then I kind of follow what happened, right? So, you know, beginning of the day, maybe some buyers now, some sellers, buyers, sellers. Yeah, so I think overall that doing both, buying and selling. If you basically sell the 12-13 strangle, it gives you 30 cents, and then the 12.5 straddle is 65 cents, right? So, you know, it might be worth selling, but if you look at Alcoa for the past 6 months, you know, you can have a decent move. You know, maybe it might go up. It might almost be better to sell the puts than the calls, just because it's gone down since it got all those some upgrades and some downgrades. But generally, like, it was kind of bullish. So maybe selling some puts might be better. But then, you know, for 15, 16 cents, I don't know. So maybe the strategy is sell the strangle, but again, for 29 cents max, it doesn't really seem like that great of a strangle to sell. I do have you know, 2 of these April 11 calls, so maybe, you know, I should sell some of these. But again, it's not really that big a deal. So, you know, maybe I can even sell these 12s. But, you know, if I look at just this earnings, it's not that great of a sell. Maybe I can sell some of this strangle, but literally it's 30 cents. And if this stock moved, like, my thinking is it might move $1.50 at most. But, you know, generally it's saying it never moves. So, like, all the earnings is pretty much calculated in. So maybe this time it won't move as much, but I think selling the strangle, if you were going to do it, might be the best move. Let's look at the next one, STZ. Let's see. Okay, stats. 1,000 calls to 700 puts. Yeah, so it's way high. So it's basically saying it's going to move 6%, but in the last 12 earnings, it's actually moved 12%, 6% as well. So it's actually pretty much saying it's right in line with what it's saying it's moving. So maybe it's not that big a deal. Stars Constellation brand, I think, as I know it, they're like right. So they do alcohol. So generally, you know, these guys aren't as sensitive to the whole marketplace because people drink whether it's good times or bad. But maybe you can look at it. Looks like 80, 90. So usually this is how I kind of look at it. I look at where the stock might go. You know, so last time during earnings, it went from 69 to 76, so $7, and then it went up the next 3 or 4 days. So depending on what the next move is, so this has a history where you see this blue line where it's higher than the red line. So it does have a history of moving a decent amount. So you'll get hurt if you sold a straddle here. So what you want to do is basically see what you think is the best. If you think it's already had this downturn and maybe there's some support here, right? Then maybe doing some downside is the way to go. If you think like it's going to keep going down, maybe doing some upside, selling some upside. But you know, in the end, nothing in the order flow is pointing to anything strong. Let's go to Best Buy, or it's actually Bed Bath & Beyond. Let's look at the stats. 2,500 to 4,100. Looks like they're selling all the biggest trades are selling, but it's not really that much, right? We're talking like less than 500 contracts. It's moved 5%. It's like saying it's moving 5%, but it's moved 7%. Generally, I don't think there's anything here. If I look at the option prices, nothing here either. Let's look at Family Dollar, FDO, stats. Way more puts than calls. Jan puts 75, so Jan 55 puts is what people are buying. Looks like it's been on a downward trend since the beginning of the year a little bit, or since September of last year. So we'll see how that goes. The volatility is relatively high. It might be a decent one to sell some options in, but like I said, I don't really know too much about this stock, so just selling it would be kind of risky for me. So if you guys do have some info, you can check the option chain, and usually I like to sell options in earnings because it's high vol, but only on ones that I kind of generally like and understand. The next one is JP Morgan. Let's look at the stats. And pretty even, mostly selling, some buying. It's gone down. It might go down to this 50-day moving average. 2.4% is what it's predicting, and normally it moves 2.2%. So maybe like $1 or something is what it's expected to move. I don't think their earnings are predicted to be that spectacular, so we'll see what happens here in terms of what they're going to report. Wells Fargo also reporting April 11th before market, so we have a few days. Same thing, stats, same thing as JP Morgan. So it's just mixed. It's going with the market. Basically, the whole market is selling off. So nothing big here. So, you know, the only thing I see here is Agilent, even though it's like saying it's a 4% move. So you see there's a 4% move right here. and average-wise, it's only moved 2.3%. So that might be something of interest, but you know, in terms of the actual amount, it's only, you know, if you look at it, it's only 30 cents. If you wanted to maybe extrapolate and sell these, the 13.12, it's 40 cents. So still not that big. This one, at least you only have to wait it out this week. The added thing for this is the market is going down as well. So, you know, if you, let me actually go daily. Yeah, the market's been selling off, so you would have to take that into consideration when you're doing any earnings play this time around, just because the market's not stable and the market could drop substantially more, and that'll drag everything down, even if Alcoa has good earnings. So you almost have to kind of like have the fair value of the earnings announcement be slightly lower than it is, or you might say, hey, look, it's sold off quite a bit, so if anybody has good earnings, it has a decent chance of an upside, but maybe the downside is limited just because it's sold off so much, right? So as soon as like they announce, all the analysts are going to start doing calculations, and if they actually find out throughout the calculation that the stock should be worth more, or even if they do the calculation, let's say find out, you know, it's worth where it's at, basically by the fact that the whole market is just selling. So this is before earnings, we're selling off, so the downside is almost like being put into consideration even before they announce the earnings, just because the market is selling off. So this could change really quickly after earnings when they actually run the numbers, that maybe this is overdone, or even if they do miss, the downside isn't as great just because it's already sold off 1.65%. So the downside here might only be another 1.5%, whereas the upside could be maybe 3 or 4%, right? So that's kind of what I'm thinking. But in general, I think just selling this might be a good way to go. So I'm actually going to do this. Let's see, sell one of these, sell one of these. It's weird. Okay, looks like somebody actually hit the 12-cent kind anyway. And I'm going to sell it for 27 cents. All right, so I'm going to send it a one lot. And tomorrow, if it's less, I'm just going to close it, right? Or hopefully I'll just close it. So I'm going to send a one lot. Send. Yes. I'm not sure if I'm going to get filled. That's what I have in right now. I might have to adjust it later, but that's my order in. So hope you guys like the earnings report. I'm going to do one every day. Maybe narrow it down some, and as time goes, there'll be more interesting stuff. But hopefully your trading goes well. Talk to you guys tomorrow.